loan type or that? How do you know what's best for you?
I don't know. How do you know?
So that's my job. As a loan officer, when I take somebody's application, I run them through all of the available loan types. And I'm looking for a few things, right? We want to make sure that it makes sense over time, that
Yeah.
you're in a product that makes sense to keep your costs as low as possible,
Yeah.
that you can qualify in the program. Different programs have different qualifications, and that it meets your financial expectations, meaning how much money you're going to put down, what you want to pay monthly, the interest rate.
So typically it's funny, like when I meet with buyers for the first time and we go through the whole home buying process, we have a buyer consultation. We talk about, like how much are you thinking of putting down before we send them over to get pre-qualified. We just have that initial conversation. And usually depending on their percentage as a realtor, we assume, oh, maybe they'll go FHA, maybe they'll go conventional. But until I guess you dive into all their like details, like
you don't know.
You don't know.
Because I could have a borrower who's putting a big down payment, but they have very low credit.
Yeah.
They may be an FHA buyer where for you might think, oh, you're putting 20% down, you're going to be conventional.
Yeah.
Or the opposite where we get buyers who are putting 3% down. And a lot of realtors think that, oh, you need 5% for conventional. There is some 3% down conventional programs. So that really may be a good fit. So it's a little bit of a game for us. It's where mortgages are not a science. It's kind of trying to find best fit. Some borrowers qualify for multiple programs, and depending on the house, we may pick a program versus another.
Yeah, it's funny because we'll have that too, where a buyer will be like, oh, well, I want to use my FHA. I want to go FHA maybe because interest rates are a little bit lower. And I'll say, although you are qualified, the house itself doesn't qualify.
Absolutely. Yeah. So that's really probably one of the biggest things that I do is kind of run through what programs make sense.
Very nice. So do you have any favorites?
I do. So I have a few favorite loan programs. Number one, Fannie and Freddie, which are conventional loans, both have programs. One's called Home Ready and one's called Home Possible. And they are low down payment. You can put 3% down. They're generally for people who are slightly lower income. Okay. So there's an income cap for both of those programs and they have better interest rates and better mortgage insurance rates.
Oh, wow.
So there's a cap on the interest and a cap on the MI. So they can be really affordable.
Yeah. And can I just mention let's say you're just starting your career, but you know that there's going to be like step up in tiers. Like you can still eventually make more money, but it's just that
right when you
initial
get
onboarding.
Initial onboarding.
Yeah.
I will also tell you FHA loans sometimes get a bad rap. I love a good FHA loan for the right borrower. It can really make sense for someone who's trying to get into a house for a low down payment, who maybe doesn't have great credit or great credit history, who maybe isn't making a ton right now, but know that they'll make more money later. And because FHA has a more forgivable debt to income ratio, it can be a great product to get into a house. And I always tell borrowers with FHA, this isn't a long-term solution, but especially right now with the cost of renting, it can really make sense for people to use that product and get into a home.
Yeah. Well, it's funny. I used to love FHA loans until a few years ago. And I don't remember what year it was when they no longer made the PMI tax deductible.
Yeah.
And also that it doesn't just disappear. Like once you have 20% equity.
Correct. You have FHA mortgage insurance for the life of the loan. Again, though, part of that's incentive for you to get out of the program, right? They want you out.
Is that why it was instilled?
Yeah, they want you out of the program. So their goal is for you to refinance into a conventional product or a different product.
Yeah. Awesome. Very cool. Can you dive into what Fannie Mae and Freddie Mac is? Because people use those terms interchangeably. And does it really mean anything to the general public?
So it can. So Fannie Mae and Freddie Mac are the two different conventional loan servicers, and they do have actually different guidelines.
Okay.
So some people will qualify for a Fannie Mae loan and not a Freddie Mac loan, and vice versa. Okay. And the biggest differentiator right now is that they actually calculate student loans differently.
Oh, so that's huge.
Yeah, Fannie Mae requires you to use 1% of the balance as the payment. Freddie Mac allows you to use 0.5% for the balance. Sometimes we find one likes a particular type of borrower better than another. So they are a little bit different. It is helpful. Some lenders only lend one or the other.
Okay.
I lend both.
And that's why it's important to talk to different people or somebody who offers a wide range of products and is educated on the different ones so that if you don't fit into this box, okay, you'll fit into this box.
Yeah, because we do occasionally get borrowers. Banks tend to have the strictest restrictions that will go to a bank and get denied.
Yeah.
And then I get them and I'm like, I can do this loan all day long. Yeah. Like, here you go. And it's just, we may be using different products. Yes. We may have different what's called overlays, which are rules that the bank or the lender instills on top of whatever the government payment guidelines are.
Yep.
So it just depends on what you're looking for and what your situation are, what's the best fit.
I guess what it all boils down to is call Kelly.
Call me. I'm happy to help. But yeah, there's a lot of different loan products depending on your situation. Being honest with your loan officer is really important.
We were just talking about this. Like, loan officers will find out everything.
We do. We know everything. So don't hide it from us. We're going to find it out anyway.
It'll blow up later.
If you have a side job, if you have a loan that's not recording on credit, if you own a house in another state, we get people who try to not tell us that all the time. And we find all this information. So tell us from the get-go so we can make sure that you're always in the right product.
And sometimes the property that you're looking at too, like if there is some major defect and it has been publicly disclosed,
we're going to find out. We're going to find out.
Yeah.
Absolutely.
So anyway, well, thank you for watching.
Thank you.
We'll see you soon.